I work really hard on that, actually. And for me, this is all about creating impact for people. It's really not, it's not the size of my bank account. I'm not trying to, make money for the sake of making money. I'm trying to educate and help people see things differently so they can ultimately, live the best life that they can.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe the key to scaling and compounding your wealth, faith, and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. And our ultimate goal is to help you scale and compound your wealth and life so you can give more or all of it away. My name is Brett Swartz. I'll be the host today. And each and every episode, we're joined by some of the world's best entrepreneurs, millionaires, and billionaires. So they share their ideas and deal stories and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable, as well as, really just find ways to grow as leaders. And in fact, our guest today, we're going to be talking about the holistic wealth strategy, and he helps entrepreneurs 10x their wealth. He's a wealth strategist, entrepreneur, former Marine captain, author, podcast host, and so much more. Please welcome to the show with me, Dave Wolcott. Dave, how are you doing?
Doing awesome, Brett. Always grateful to connect with you, and look forward to connecting with your audience as well.
Absolutely. For our listeners to get to know you for the first time, would you give us just a little bit more about your story and your current focus?
Sure. So I was raised in a middle-class family in Connecticut, probably like a lot of folks out there, and I was told that the recipe for success was go to school, get good grades, you get a job, and life would work out, right? So I kind of followed down that traditional path and went to college, did the ROTC program, and had an opportunity to serve my country in the Marine Corps and learned some amazing things there that I don't think they really teach you anywhere else in the world, such as leadership, teamwork, and integrity. Shortly thereafter, I transitioned into the tech industry. And at the same time, my wife and I started raising a family. We had an 18-month-old toddler, and then on October 24th, 2000, we literally had triplets and quadrupled the size of our family overnight. And I can tell you, Brett, the first thing that was going through my mind after holding 3 babies in my arms was, I have just got to provide for financial security for my family. That paternal instinct just really took over. And so I went to see my financial planner, and he told me the same thing that, they kept telling me over and over again, which was, hey, max out your 401k. There's these things called 529 plans. You can get some state tax savings for your kids. You're going to be fine, right? And I knew right then that I wasn't going to build wealth as a retail investor in the stock market. So this launched me on this obsessive journey to figure out how the top 1%, the top 0.01% were really building wealth. And I started investing in alternative assets, everything from oil and gas to retail to raw land, office buildings, single family, multifamily, storage, you name it. And 20 years later, really wrote my book, The Holistic Wealth Strategy, and created Pantheon to really help other people figure out, how does this world work, right? We had all read Kiyosaki, we were inspired, but what is the blueprint for actually achieving true legacy wealth and living that life that you've always wanted?
Absolutely. And by the way, you can learn more about this by Dave Wolcott by going to investments.com or invest.com, pantheoninvest.com. That's PANTHEON invest.com. I love it, Dave. I love the, I call it the realization of alternative versus primary investments. I think for the longest time, unfortunately, you can understand Wall Street has their ways of doing things, and they have financial advisors that are trained to say that the primary way to invest is through traditional 401ks, IRAs, stocks, bonds, mutual funds, diversified portfolio of liquid investments, right? And then the alternatives are the real estate or the private equity or the other ones. But if you actually study the last 35 years, I think it's like 14.5% on average compounding return if you had put it in private equity versus about 9.3 for the stock market. And so you look at those two things, and that's 50% more, right? Now, the good news is now you have folks like yourself who are educating and empowering people to think outside of maybe the more traditional ways of doing things. But our guests know that they're very successful, So let's dive into maybe even a little bit more advanced things that you have learned beyond over your stay. Like what are the more deeper insights when it comes to the holistic investor for the millionaire listening right now?
Yeah, so if I was to really unpack the holistic wealth strategy a little bit, Brett, this all starts by creating a vision statement for yourself, right? If you don't have a target, you're going to miss every time. And it seems really simple. Every time you go on a road trip with your family, what do? You plug in the GPS coordinates first. But oftentimes in this day and age, right, we're so inundated with so many different things going on in our lives, being reactionary, that we really don't have a true vision of where it is that we're going. So what is your passive income goal? What are you trying to achieve, right? And then we can start to build a plan backwards from there. So this all really starts with a vision statement. And then the first phase of the strategy is understanding that you are your greatest asset, right? In so many different dimensions, right? And you have to have a growth mindset with this entire thing. I can remember having countless, conversations when I first started getting into this, sitting around at Thanksgiving dinner table talking to people about this greatest private real estate investment deal I was going to do. And people saying to me, well, that sounds risky. My financial planner said it was a bad idea. And I had to just keep, asking why and being curious, right? Having that entrepreneur's mindset and asking questions like, does it really make sense to defer my taxes, right? Until, I'm 65? Like, I could probably guess that taxes are going to go up in the future. So doesn't it make sense to pay taxes on the seed rather than the harvest, right? But it all starts with that mindset to say, let's break free from this conventional thinking. Let's figure out what really makes sense for me. And then what kind of destination am I trying to get myself and my family to in the first place?
Yeah, it makes sense. So setting a clear vision statement, what's your passive income goal, having a growth mindset. Perfect. So what's step number 2 for this holistic wealth strategy?
Yeah, so step 2 really involves really understanding that you're your greatest asset. So you start to increase your financial IQ, your mindset IQ, and even your health IQ, right? Because think about Steve Jobs, for instance. He had all the money in the world, right? But he couldn't buy himself another day. Right. So we really have to be thinking, holistically about this. And, there's multiple forms of capital. We all like to focus on this financial capital piece, on what's in the size of our bank account. But when you really think about it and you're trying to pass on to the next generation, it's really some of those other important things like your intellectual capital. Right? What have you learned that you can share with your future generations? How about your emotional capital? Regardless of what your bank account is, are you able to really master your mind and develop deep, meaningful relationships, right? With family, friends, peers, things like that. Also, again, the physical capital component of that, spiritual capital is super important. I know that is for you as well, Brett, right? We want to be anchored in these other forms of capital. And to me, that's really what wealth is really all about. It's not about the size of your bank account or if you're driving the fastest car in town.
100%. Yeah. Wealth has so many more fronts, right? Being a steward versus an owner, stewardship mindset would be, how do we make sure that we're being intentional about our health, our emotional capital, relational capital, spiritual capital, and passing on this legacy. You mentioned your kids, your 3 kids, right? So what are some tips and some strategies that you've helped to pass on the legacy of all these kind of capitals?
Well, I mean, this is really interesting, right? So, you talk about financial IQ, and a lot of us are getting into this game late. Like in our 40s and our 50s, we're just discovering these alternative strategies and things that you can do, right? But I look at my oldest daughter, who's now 26, and we've been talking about this in our household for the past 20 years. She, just as an example, right? She graduated Virginia Tech. She saved money during college. We set up an infinite banking account for her. She put that capital inside of the infinite banking account. As soon as she graduated school, her and her fiance purchased a house. They used capital from the policy as the down payment to purchase their first house. They lived in that house for 18 months, fixed it up and everything, built up $130K of equity, then went and bought their second house, and then they were cash flowing that for $1,600 a month, right? All at the age of 24, right out of college. And now they're actually they literally close on Monday for their third house, and they're literally doing it again. So they've built up equity. They've got the protection, right, with the infinite banking policy set up. They've got cash flow going. And so that is the power of financial IQ. And as you go, right, you just keep adding some more zeros. Or another example of financial IQ is, your strategy, right, in terms of, DST, right, and setting that up properly. Whereas a lot of people, it's all about getting that education up front. But most people, entrepreneurs, are having big exits, and they're paying half of that to Uncle Sam. And that could be avoided if they were educated.
Yeah, it starts with education. It starts with being intentional. It starts with having a clear vision, and then figuring out what the gap is between that vision and what you're trying to accomplish for your dreams, and then finding the solutions and team to help to execute on that. So that's really cool. I love that at 24, 25, they're able to buy the house, invest, strategy, multiple places already. That's powerful, especially in this day and age. It's not easy to be buying houses for kids, or kids. I say kids, I mean 25-year-olds, right? It's much, much harder than it's ever been before. So that being said, where do you feel like the market is when it comes to real estate or investing? Or you mentioned oil and gas, you mentioned different things. Do you have a sense for where in this season of investing are you more allocating heavier amounts towards, and that shifts depending on the season or the time? What's your sense for opportunities right now?
So our investment thesis is this, Brett. We invest in assets that are non-correlated to the market, and then have a return profile that's really a trifecta, meaning we're driving tax efficiency, passive income, and forced appreciation in the asset. So out of that, we really like the asset classes of real estate, private credit, and energy. Right? Those are the three that we're focusing on, and they all have 1 degree. Our private credit fund we've been running now for over 2 years. Super low default rate, really high double-digit cash flow returns, which is really nice. And it's all in a market, that alternative lending space, that's growing, over a 20% CAGR, right, over the past 20 years, and continues to expand. So we really like that space. That's actually a hotspot of where billionaires are investing for cash flow, is in private credit. So great sector there. On the real estate side, we've been really cautious with multifamily. Still think things are overvalued. We actually haven't bought any multifamily in probably 18 months now. There's deals out there, but they're much harder to find, I think. One of the deals that we actually just launched this month is a dental anchored real estate fund, which is really interesting in that the primary tenant to this medical office building is a dental private equity firm. So they're the tenant. They've got 60% occupancy filled before the building is even built, right? And then you add in other tenants like an orthodontist or, a chiropractor, right? So great tenants, 10-year lease, low risk, and, a great GP team as well. So we've been looking for, still inside of real estate, really unique opportunities where sponsors have great differentiation. They've got a great, business model, and they've been kind of scaling well. So I think that's pretty strong. And on the energy side, we continue to be proponents of oil and gas. We had a really nice oil and gas opportunity that investors, I know a lot of your investors are keen on taxes, and we had up to 92% active income tax offset just in Q4. We'll probably have that again this year, launch that opportunity, plus a nice return. It was actually 62% IRR in year one. So we really like energy for the fundamentals there. And, I think, there's going to be good plays there for at least the next 10 years.
Excellent. So it sounds like your model is like a fund to fund model where you're vetting and looking at others that are doing best in class in the energy, private credit, and real estate world. And then is that how it works? If people
Yeah,
want to
so
work with you? Yeah.
we run a virtual family office. So that's
Yep.
one aspect is creating deal flow for our clients and investors who can invest alongside with us.
Mhm.
And then some investors can, participate in our virtual family office, get access to that. We also run a mastermind as well.
Awesome. That's great. And let's talk about the oil and gas. This is interesting. So like a lot of traditional real estate folks, oil and gas is something maybe it's a little different, so how long have you been investing in oil and gas? What's your general feel for the average returns, right? And maybe pros and cons for, versus just traditional real estate. Kind of give us a little bit more there, Dave.
Yeah, I mean, my first oil and gas investment was 20 years ago. Getting into working interest and really understanding how the tax benefits work. If you're a W-2, this is a phenomenal strategy, right, to really reduce the ordinary income taxes or really any taxes on your AGI to be able to offset that. I think there's some big areas to look out though for in investing in this sector. If you really have to understand the due diligence, who you're working with, to really identify the right sponsor. There's plenty of operators out there, right, that are delivering, but you really need to get a good understanding of how the business actually works. What is the business model? What's the track record of the sponsor? And then really seeing if that aligns to your investor DNA and risk tolerance.
Okay, so there's not like a general returns though that you've seen on average, on per year. There's you don't have a sense for that, or do you have a sense for that you want to share?
Yeah, for sure, but it's structured differently, Brett. Right? So and this gets a little more sophisticated, right? So investors have to think about this, right? We had, just as an example, the opportunity we had, just in December, right? The IRR was 62% in year one if you factor in the tax benefits. Okay. So rather than giving Uncle Sam, the bigger check, right? You're going to actually partner with the government and invest into energy. So you get that tax benefit right out of the gate, right? Rather than paying that. So in my mind, that amps your return as well as reduces your risk in the whole deal. We then have over almost, I think it's about 54% return of capital inside of the first year. And then the next year is about 24%, which is what the projection was on that. So it's quite a quick return of capital in the first couple of years. And then we have distributions, that go out into the future, right? These wells could last quite a while. It is important to understand that wells are a depleting asset, unlike real estate, right? So they actually get, produce lower and lower over time. But we also have really managed risk in this case by working in a model that consists of actual production as well as some new development, right? So some of the production is with big names like ConocoPhillips, right, where you're getting a working interest of that well. Right. So it's already producing. We're getting that. And then we have some new development that goes into that. So that kind of manages the risk in terms of the model. And there's also a collar strategy where we can make money. That's probably one of the biggest risks in energy is the price volatility, right, that we can't manage, right, of oil and gas. But in this case, there's a collar strategy where we're making money between $60 and $85 a barrel.
Okay, so let's break that down. So $1 million, 62%, so it's 620,000. How much of that is cash flow just from the investment, and how much of that is, you said, the tax, the tax write-off?
Well, it all depends on your tax situation, right? That's that's a projection on that, right? So depending on your tax brackets, right, how much income you have.
You make 500,000 a year. Just give you estimates here, right? You make 500,000 a year in your W-2 or your real estate investments, and so you're like, hey, I got an extra $1 million. I'd like to put $1 million into the oil and gas. and how much cash flow from the actual investment and how much of it is the tax
So
write-off?
it's usually about 40% would be estimated for tax, right? And then, beyond that, it's actually return of capital first. So you're going to get a return of capital for your first few years. So there's no tax on that until you've hit full return of capital, and then it would start counting above that for your distributions, right? And again, all models, I don't want to, these are very detailed specifics for an opportunity that was last year, right?
I hear you, Dave. I
In
just think
models,
that's why I think sometimes, I haven't so I'm still trying to get my head around oil and gas is what I'm saying. Right.
Okay.
And I think part of that is because kind of what you're saying here, it's just, maybe my mind just stops sometimes on these things. Right. So some of my clients have done it, by the way, but I'm still like really getting a sense, like if I put $1 million in, I'm going to get about, let's call it 100,000 per year in cash flow. Right. Plus about, another 200 in write-off, right? Or whatever that kind of general ratio is. And it's always going to vary based upon all the different things, right? But then it's going to last 3 to 5 years, it's going to last, this amount of time. And at the very end, I'm going to get this back. And so that's the sense, multifamily, it's my world. So I grew up understanding that really, clearly, right? You're going to get about 6 to 8% cash on cash. It might be a 12 to 17% IRR. You're going to get, bonus depreciation of X, depending on how much they have each year and, on the ratios there. So I can understand it. And I want to really understand oil and gas, but I just think it's sometimes it just gets past me a little bit.
Well, I think there's different models. It's important to understand that, right? Every deal is structured a little bit differently. Some operators will sell assets, roll them up to a larger producer on the back end. Some of them will just take the working interest as long as possible, right? And it all comes back to, what we talked about in the beginning of my book, right? Understanding what your vision is, what your goal. So are you looking for cash flow? Are you driving for, legacy growth, right? What is really your goal? But I can tell you that if you are paying, more than 10% in taxes, right? This is a great way to actually reduce your active income taxes, whether you're a W-2 or a business owner or whatever, because it's turning that cycle of money. So in this case, Brett, right, rather than paying the full check, which you would have to pay to Uncle Sam at the end of the year, you're going to put this into an investment. And in this one, like I said, it was almost 54%, I believe, return of capital inside of year one. I mean, most multifamily deals, you're not getting return of capital till year 5, right? So your almost full return of capital is back in 3 years, and you've offset the taxes. So when I look at it just from that standpoint, the velocity that I can add to my money is huge. And the operator in this case as well, they're doing $150 million in EBITDA. Okay. This is a very large institutional player. All of their profits, they're recycling themselves by avoiding taxes and putting it right back into their own fund.
Yeah. So let's break it down again. So like $1 million goes in and then 540,000 cash would be in your account, right? At the end of that year.
Yeah.
And so, and then the rest of it is staying in there. Does that tax is it because it's the equipment write-off and and then does it get recaptured in 3 years? Like what's the average or how does that work there? Like you keep saying recycle. So what's the play? You stay in there and you keep rolling it into more and more oil and gas deals. Is that kind of the strategy there?
There's no one size fits all, right? Yeah. It kind of, again, it depends what
would you do, Dave? I guess that's a better way to put it, right? So like, what do you like to do best?
If I have income, I will definitely roll it in. I mean, and especially this is a move you can actually make in December. If you've had your, meeting with your planner on December 5th, and then you're like, wow, I've got a tax issue, right? This is definitely a move that you could make. So I've been investing in oil and gas every year, right?
Yeah. So let's say I have $500,000 tax bill. Like you're gonna pay $500,000 tax, and you're like, okay, well, we it's going to take about $1.2 million to knock that out, to put that into oil and gas. If I had that kind of cash sitting around, is that how you would do that?
Yeah.
Okay. So then $1.2 million goes in, and then within a year of that $1.2 million going in, I would get 54% of that back.
Correct. Yeah. And then year
Yep.
two, it was like 24%. And year
Yeah.
three, I can't remember off the top of my head. But, by year three, year four, almost all of your capital is back off of the table. You've gotten the tax benefits. And then, you can just keep recycling that capital, right? Because you've gotten access to it quicker.
And the tax benefit, so it's basically like a built-in deferral, right? Where you're putting it in, and then you keep adding until it offsets.
Correct. There's going to be some recapture, like in real estate as well.
Yeah. Okay. All right. That's good. No, thanks for diving into that more, Dave. So, what haven't we asked you so far on the holistic wealth strategy that you want to cover?
Yeah. So, the third phase is really creating a dream team around your wealth, right? This is really important. And we structure this in a way that's, kind of like a family office. I mean, even if you only have $2 million in net worth, you can still think like a family office. And what this means is, you need an advisor who understands asset protection, estate planning, advanced planning, having a tax planner, not a tax preparer, right? Risk management and life insurance, right? Having all of these dimensions covered so that we're not only growing our wealth, but we're really preserving our wealth, right? And avoiding any blind spots, that might creep up and really get you. So I think that infrastructure is really critical. We're also really big proponents of leveraging life insurance through infinite banking, family banking, premium life insurance. There's some really great strategies that you can leverage if you're, high net worth, ultra high net worth in there as well.
Love it. Dave Wolcott here, getting the dream team and helping all of us to consider, how to be better stewards with our wealth and how to there's wisdom in advisors, right? So I think that's great. Asset protection, estate planning, life insurance, tax planner. Awesome. Okay, great. Shoot, you ready for the lightning round?
Sure.
All right. Knowing what you know now, if you go back to your 25-year-old self, what's the one gold nugget make sure you tell yourself to do?
Invest in yourself.
Perfect. Question number 2. What's the number one book you recommended the most in the past year?
Who, Not How.
What's the biggest frustration when it comes to the 1031 exchange?
Honestly, I have not done any 1031 exchanges, so I wouldn't be able to give you any relevant advice there. Yeah.
Best way that you eliminate the death tax or estate tax?
Through life insurance planning.
So my understanding, Dave, let's dive into this a little bit. When you do that, life insurance is death tax free and estate tax free, right? The premium payout, but it doesn't eliminate it prior to, right? So, or what are you doing to just get rid of, not to be able to pay for it through life insurance, but to actually get it outside the taxable estate before you die?
Well, there's definitely structural things you want to do in your asset protection strategy as you set up, your trusts and all of that. Mm-hmm. But when you're looking at the estate taxes that are coming due upon your death, right? If you have, properly structured, right, insurance plans, that will help mitigate that. And that's a big, part of basically family, creating family banking through the use of whole life insurance policies that will mitigate that and really have the majority of your assets roll to the next generations and be able to handle all those taxes, because it can be a very big risk where the next gen needs liquidity to pay for all those taxes.
Yep.
And they have to sell assets, right?
Okay, so you ready? I'll throw a strategy at you to see what you think. You ready? So we use what's called a DST plus, a 2.0, to eliminate the estate tax prior to death. And then when the funds are in the trust, it can be used to fund a life insurance policy. And that life insurance policy is just gravy for the kids because it's not having to offset the estate tax. And so without any life insurance gifting or insurance required, or life insurance, gifting, or charity required, we can eliminate. So let's say someone had $130 million estate. Let's say the exemption's about $30 million. Married right now, it's about 28. But the challenge would be like, hey, we need to buy this expensive life insurance policy to fund basically the $40 million, that scenario, 40% of 100 million is 40 million. estate tax due within 6 months of the family passing, right? And so they've got to pay for all that. And they may have great health or not good health or whatever, right? So instead, we sell that 130 million worth of apartments or business or whatever it is while they're still alive. We get it outside the taxable estate forever. Again, no life insurance, gifting, or charity required. We turn around, Dave, and we use that to fund life insurance or other investments. But all of the growth inside of that trust, and also all of the the kids can be the beneficiaries. All of the life insurance that they can use to buy that, all of that's outside the taxable estate. So you get the 40 million is forever eliminated. And if that 130 million grows to 260 million, let's say they had 10 more years to live and we could double the money, all of that's outside the taxable estate. And so that's kind of the thought there. I don't know if you have any other strategies.
Great strategy. Great strategy, Brett.
Yeah. So
love it.
Yeah. And if anyone's interested, you can go to capitalgainstaxsolutions.com to learn more about how we do that. Okay, next question. What are you most curious about right now?
Honestly, I'm really curious about the new administration and, what's happening with the government. A lot of things. It's been quite an interesting. I mean, what are we, only 2 months into it here, and there's new changes every week, what's going on with Doge and things like that. So really curious about what's going to happen, for our country and things. And also very curious about AI is just exploding massively. And it's really exponential level thinking that we can't even fathom, right, what's going to be possible. And the rate of change is happening so fast that I'm really curious about that.
Yeah, spot on. I couldn't agree with you more. Second to last question, number one leadership quote or theme that you strive to live by?
Lead by example. Comes from the Marine Corps, one of the core tenets.
By the way, thank you for your service.
Appreciate it.
My cousin he's in MARSOC, or he's out now, but and he has a watch company. It's called Sang & Instruments, and basically it's cool. He serves basically his military or first responders, and he's got a whole company around it. And it's pretty awesome to see the movement from full-time Marine to now full-time entrepreneur. So, but I know once a Marine, always Marine, right? So, did any other cool stories you want to leave us with from the Marines? And where did you serve, by the way, when you're in?
Yeah, so I was in right at the tail end of the Gulf War back in the early 90s. But I was kind of a fun story here. Was actually after Black Hawk Down happened, we were on deployment. So we went to Somalia. I was there for 3 months, and we literally did the whole tactical withdrawal when the U.S. left. So back I guess it was right about 96, spring maybe of 96 when we left. And I was the infantry platoon commander, so we were literally the last to leave on the last day. All the U.S. forces were pulling out, and we were on the beach in our amphibious assault vehicles, and there's probably 50 reporters on the beach looking around going like, oh crap, what about us, right? There's no more Americans here. Like this place is like a complete hotbed. And they asked that question, well, what about us? And I answered, I said, get out while you can. So they quoted me on that, and that was across like the AP. So I was on the front page of New York Times, Washington Post, Turkish Daily Times. I mean, you name it, across all newspapers. When asked what's the situation, Lieutenant David Wolcott says, get out while you can. So it's my little 5 seconds of fame, leaving. But an amazing experience, and being combat tested and living in, seeing, third world countries and the way people live and things like that, just really changes your perspective in life.
Awesome. And we'll finish with the last question, which is stewardship over ownership. What what would you say, any wisdom for us to how to make sure to practice that, right? Where, we have a short time on this side of Earth, and what's the way that you're best practicing being a steward of the time, the energy, resources, talents you've been given versus an owner, and so just basically living to pass the legacy on.
Yeah, I like that question, Brett. I work really hard on that, actually. And for me, this is all about creating impact for people, right? It's really not, it's not the size of my bank account. I'm not trying to, make money for the sake of making money. I'm trying to educate and help people see things differently so they can ultimately live the best life that they can and really understand these different things. I think the psychology of money is just really fascinating, right? Because again, we're in this world of social media, FOMO, all these different things. I need a boat, I need a bigger car, I need a bigger house, I need a bigger vacation, all of these different things. But I mean, just think about it, when my number is 146. So when I'm 140 and, sitting around with my kids, what is it that I'm going to actually pass on to them? It's not really the money that I want to pass on. It's the values, that I have for my family. It's, all of these concepts around the capital components of wealth that we thought about. What does wealth actually mean? It's about, giving back, right? It's about faith, right? And all of these other things. So if we can really help to do that, and, back to my earlier example, lead by example, right? These are all the things I'm doing. I'm trying to teach to our kids. And now I actually just became a grandfather this year as well. Yes. So it's super exciting to see that next generation come. And, it really smacks you right in front of the face. What do you want to do for that future generation? Right? And these are all the really meaningful things. It's really not about the money. And in fact, look at the statistics, right? 80% of it is lost in G2. And in generation 3, 90% of the money is actually lost. So what are you actually passing down?
Spot on. It's a great way to end the show. Dave Wolcott, I want to thank you for being on the show. It's been awesome to be able to meet you at the family office club and spend some time with you now. And thank you for sharing your wisdom. And thank you for helping us to think with intentionality with the holistic wealth strategy. For our listeners who want to get in touch with you, can you remind them one last time what's the best place for them to find you?
Yeah, what I wanted to do for your listeners, Brett, is if people wanted to get a free copy of the book, they could go to holisticwealthstrategy.com.
Perfect. Thanks, Dave. And I also want to thank all of our listeners for listening to another episode of the Build It to Millions podcast. We're also streaming on Capital Gains Tax Solutions podcast. We're here with you, the entrepreneur, the investor, the business owner who's looking to scale from millions to billions and make a bigger impact. We're on that journey with you right now as we scale as well. And we always want to bring on some of the best guests to help us think with intentionality and stewardship and impact. And so hopefully you enjoyed. I think you did. Dave and I's conversation today. Please rate, review, subscribe. And of course, if you're exiting a highly appreciated asset, business, Bitcoin, real estate, multi-million-dollar gains, you're looking for a capital gains tax solutions, go to capitalgainstaxsolutions.com to get started with your plan and or pick up the book, Building a Capital Gains Tax Exit Plan. Appreciate everyone out there, and we'll talk to you all real soon. Thanks now. Bye.